Today, we're diving deep into the world of logistics. We've got three titans of the industry, and we're going to break down their strategies, their strengths, and their biggest risks to see which one makes the strongest case for the future. And every single insight we're talking about comes directly from in-depth analyst reports on these companies. You know, it's easy to forget, but basically everything you own, your phone, your clothes, the food you eat, it all got to you through this incredibly complex, almost invisible network. That's the world of logistics. It's literally the circulatory system of global commerce, moving trillions of dollars worth of stuff 24/7.
And right now, inside that engine room, there is a massive battle for dominance heating up. We're watching three very different companies fight it out to see who's going to own the future of delivery.
So let's meet our contenders. First up, you've got Old Dominion, or ODFL. We're calling them the quality champion because they are just known for flawless execution. Then there's FedEx, the turnaround titan. I mean, a household name, a global giant that's right in the middle of this huge, high-stakes reinvention. And finally, we have ArcBest, the hybrid innovator. This is a 100-year-old company that's blending old-school trucking muscle with new-school technology.
This brings us to the big question we're trying to answer here. Looking strictly at the analysis in these reports, which of these three companies makes the most compelling argument for the future? All right, we're going to frame this as a three-round fight. First, we'll look at their business models and their competitive moats. Then, leadership and execution. And finally, we'll weigh their growth plans against their risks before we get to the final analysis. Let's do it. Okay, round one, models and moats. This is all about how these companies build their business, and maybe even more importantly, how they defend their turf from the competition.
Now, when we say moat, what we're talking about is an economic moat. Think of it like the ditch around a castle. It's that sustainable, competitive advantage a company has that protects its profits and its market share from rivals who are always trying to break in. And their approaches here could not be more different. ODFL is what you'd call a pure play. They are laser-focused on one thing: premium less-than-truckload shipping, or LTL. FedEx, on the other hand, is all about integration, trying to combine its massive express, ground, and freight divisions into a single one FedEx machine. And then you have ArcBest, which is playing a hybrid game, pairing its traditional, unionized trucking business with a flexible, tech-driven brokerage. So whose defenses are the strongest? Well, the analysis really points to ODFL. Their reputation for top-tier service and their incredibly dense network of terminals is just something that's really, really hard for anyone else to copy. Now, FedEx's moat is its sheer global scale and brand recognition, but the reports note that its own complexity has kind of blunted that advantage in the past. ArcBest has a credible hybrid moat for sure, but the tech side of their business faces a lot more competition. All right, on to round two, leadership and execution. And this one is really a tale of consistency versus transformation. The report cards here really tell the story. Look at ODFL, just a clean sweep of strongs across the board. That's what decades of discipline gets you. Then you have FedEx, which gets a strong Fritz vision, but only fair on execution and financial management, which really reflects those struggles they had before this big turnaround began. ArcBest kind of lands in the middle, with very good vision and excellent financial discipline, but a more mixed record on execution. And this quote from the FedEx Deep Dive just perfectly captures the drama of their story right now. The company is in the middle of a massive change, and the reports are giving the new team under CEO Raj Subramaniam a lot of credit for moving fast, making tough decisions, and it's already showing up in the results. But while FedEx is busy transforming, ODFL just keeps on executing. Check out this number, 74.6%. That's their operating ratio. Now, all you need to know about OR is that lower is better. It's a measure of efficiency. It means for every dollar in revenue, it only costs them about 75 cents to run the business. And to do that during a freight slowdown, it's incredible. It's the best in the entire industry, and it's not even close. And that amazing operational skill translates directly into financial strength. The reports describe ODFL's balance sheet as a fortress. It has practically zero debt. FedEx is definitely getting better, but it's still carrying around $20 billion in debt. And ArcBest? True to form, they are very prudent, very low debt, but their profits do tend to swing a bit more with the ups and downs of the economy. And that brings us to our final round, growth versus risk. We're going to look at where the future opportunities are and what could possibly go wrong. FedEx's growth plan is by far the most dramatic. You can think of it like a 3-act play.
First, they've got a massive cost-cutting program called Drive, aiming to slash $4 billion in costs. Second, they're merging their separate express and ground networks to be leaner. And third, the really big move, they're planning to spin off their super profitable freight division into its own company. It is a classic high-risk, high-reward strategy. ArcBest's growth story, on the other hand, is all about innovation. They're making big bets on new tech like Vox, a robotic forklift system, and Phantom Auto, which lets you operate trucks remotely. They also made a really important acquisition, Molo, to bulk up their brokerage business. The whole idea is to create this one-stop shop, an integrated platform where they can cross-sell all kinds of services to their customers.
But of course, with growth, there's always risk. For ODFL, the reports flag its sensitivity to the broader economy and its premium stock valuation. You have to pay up for quality. For FedEx, it is all about execution risk. I mean, can they really pull off this incredibly complex integration while fighting off giants like UPS and Amazon? And for ArcBest, the risks are more about their union labor costs and the pricing pressure that just comes with the territory in the freight business. All right, 3 rounds are in the books, so let's bring it all together in the final analysis and really pinpoint the key differences. When you boil it all down, these 3 companies really represent 3 completely different stories for an investor. ODFL is the durability story, a bet on best-in-class consistency. FedEx is the catalyst story, a bet that their big corporate shakeup is going to unlock a ton of value. And ArcBest is the optionality story, a bet on the value you get from innovation and a flexible platform. Putting them head-to-head makes the choice even clearer. You've got ODFL versus FedEx, which is really a choice between proven consistency and massive scale with potential short-term catalysts. Then you have ODFL versus ArcBest, a more durable moat and resilient profits versus broader platform innovation and technology plays. So after all that, after digging through these deep dive reports, which company actually comes out on top? Based purely on the analysis presented, the reports make it clear Old Dominion presents the strongest all-around case. It's that powerful combination of unmatched operational skill, that durable competitive moat, and its top-tier financial quality that makes it the most compelling candidate for creating long-term value. But the story definitely doesn't end here. The reports really set up a fascinating dynamic for the future. Old Dominion might be the champion today, but with a titan like FedEx reinventing itself and an innovator like ArcBest scaling up its new technology, the big question is, for how much longer can the champion's disciplined reign continue unchallenged?